All right, welcome everyone. We're starting a new session here. Welcome to the FX Tokyo Open Live Room. This is a daily show that features real trading at the very heart of the Asian session with me, Giuseppe Basile, also known as the FibStalker. It's a daily show. It's taking 1 hour at the moment. And welcome, Scott, Karim, good day, Sinatra, FX admin, Desi. Sorry I'm late. That's not a problem. We are always late. We are all late. And welcome in today. It's being a very interesting market with some opportunities, but mainly intraday opportunities. And I'm going to show you some of the ideas I had in mind to trade today. And before we do that, good evening, Ambassador, FX Ambassador, welcome. I don't see everyone online here, but we are slowly, I see here participants are slowly coming in. All right, so as you know, trading is risky. I take trading and the risk very, very seriously. Trading is a business, so if you don't manage risk, you're going to be out of business very quickly. And that happens unfortunately to 95% of people. Welcome, Greg. So trading Forex and its derivatives, futures, options, and CFDs and other instruments or retail off-exchange transactions involve substantial risk of loss. It's not suitable for all investors. You may lose all or more of your initial investment, and leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results, and make sure you review the FX risk disclosure on FX website as well. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as substitute for extensive independent research, which should be performed before making your investment decisions. This information I provide here in the material is for general information and educational purposes. I'm happy if you, get confident by paper trading these ideas. I, Giuseppe Basile, FibStalker Consulting Incorporated, FX will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. Okay, so welcome everyone. That is, we take trading seriously, so we take risk seriously. Hello, Peter. Greetings to all. Greetings to you. Thanks for coming in. As I was saying, we take trading seriously. Trading is not a game. And certainly, you have realized that at some point, trading becomes something, very, 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 very important. So here I am. I want to say thank you and good evening to, and good day and good morning and good afternoon to everyone. Thanks for joining in today, and we're gonna get into the markets here. Have your questions ready. As you know, I'm a contributor to FX Street. FX Street, I believe, provides some of the best webinars of the Forex world, probably the best ones. And I've also have a coaching program that is something that I help my students with to actually learn a repeatable process that they can apply again and again and again. If you're interested, I'm starting a new session in May. Is going to be very interesting with some new material as well. So if you're interested, just visit me here or send an email to fibstalker@gmail.com. So welcome everyone. Mervin, Peter, FX Ambassador, it's already in full throttle on the business there, asking for pound versus yen and kiwi and the European, the euro dollar there. So there were some developments in that area as well. We had a break of an area of support where we're going to go through all these markets, and you're going to see what has been going on in those markets as well. Okay, so Kiwi and Australian dollar, Japanese yen. So no problems. You're going to review all these markets here. I'm reviewing one of my accounts here. All right, so let's actually another problem. Yes, you're not late. Oh no, that's your name, your nickname actually. All right, so let's get into this and let's start looking at the charts here. Let me see. Here we go. Okay, so what you see on the screen here are the daily charts, some of the markets I follow, and I see that there. Let's follow the requests there. Pound versus yen, Kiwi, and euro. Let's start from the euro dollar here because there was an important development. This level is gone, and for me, weekly support is gone. So, ladies and gentlemen, I believe this market now can keep moving in extension lower here, potentially into previous lows, 105.40. Okay, just a matter of how it gets there, whether we get some sort of reaction or this market just continues lower. On a 4-hour time frame, there was a good opportunity in around 3 a.m. here for a trade, and this market has the potential to get into 108.20. If it gets there, we will keep we'll keep timing this market on the 4-hour time frame in extension short. So not a place where you want to act at this stage. I want to see first 108.20 and then a reaction to get involved, or I'm going to pick up this market on the 30 minutes on rally against the main direction, which is down at the moment, around 2 a.m. EST or 8 a.m. EST, basically the European Open and the US Open. So that's going to be my strategy for the coming days in order to take positions into this euro dollar. And the euro dollar now, it's actually sliding like most of this market at the moment. The euro Canadian dollar, same behavior. There was an opportunity at the around 8 as well, 8 EST, the US market open, and the same thing for the euro Australian dollar. They gave an opportunity yesterday, trading again this 153.74, and there was an opportunity for a quick trade to previous low. Hello Lucas, hello Karim, welcome. We just started here, so very little has been spent here and said. So if you have your questions, prepare them. You have Craig, Peter, Mervin, FX Ambassador, sorry I'm late, Karim, Lucas, Scott, Sinatra, Desi. Good day to you. So okay, I move my window here. So welcome Lucas, and the pound versus yen then. Pound versus yen, there was not really a lot that has changed recently. Of course, this market has tested that all important 56.40. You know the importance of that level, and this market is actually, has pushed into that level a little bit, but it's getting some traction here. So will this be enough to reverse this market? It's a little bit early to say that. We will need to look at this market on a smaller time frame. We can certainly do this on on this window here. So let's go and review that market. Let's see what we can actually infer from the way this market has been developing recently on the smaller time frame, the 4-hour time frame. Okay, so let's see what we can see in this market once we get the data here. So this market is actually participating potentially in a long here, and that's very evident. We had that long tested twice, and as you can see here, but the second time there was a little break there, so we have to be very, very careful here. The first time the level was held. It's not impossible though for this market to have a lower retrace before the start of a move higher. I mean, shorts are in control on the 4-hour time frame anyway, so we should not be surprised if we see this market trading into 156.65, and then we will need to see whether the sequence of move lower on the 4-hour is capable of pushing this price lower, or this market is going to break the sequence and potentially start a move higher. Let's review this on a daily time frame here. Not that one, but this one. And again, as you can see, that market has actually found some participation on top of that 156.40. That's not a case that we see participation there. Okay, so this will move. It's on top of a potential area of support. So shorts at this level are very, very unsafe, I would say. I already mentioned that yesterday the 4-hour is in control in this market at this stage. So it's in control short, sorry. So I wouldn't go long yet until we get a confirmation that there is actual participation around this 156.40. Okay, so I wouldn't be aggressive in this market at this stage. This market is taking profits, taking this opportunity on top of this level to take profits from this recent move lower here. Okay, so there is no need to become active here at this stage. Let's just wait for this market to show the hand. Whether there is going to be a continuation lower and weekly are not going to hold this price, or whether once the 4-hour gives way here, there's a possibility for a retrace higher here, and that could be a sizable retrace. We will see. Of course, we need the Japanese yen to strengthen on the US dollar as well, which when we look at the US dollar Japanese yen, we clearly don't see that. We have not seen that today. We actually are seeing a continuation lower here after the open. There is a potential area of support. We need to see whether that is going to hold or not. And it's barely holding here, so we don't know. We need price to. A lot of people see reverse head and shoulder here. I just see area of support. If they are broken, those area of supports are gone, and this market is still holding this area of support. As you know, we would like to see a more decisive retrace in this market, but what we want, it's really not important, because the market is not going to do what we want. The market is going to do whatever it has to do. But we build a case for this market. We know that whether we go down first or we go up first, we will get an opportunity to trade into that 110.47 there. And if this market goes to 109.90 first, okay, we're going to get the next reaction higher, or just a continuation lower. Okay, so this market is showing a correction, lateral correction here, which is a continuation. It's a continuation pattern as well. So let me do some little consideration here. When we look on this daily time frame, what do we have? We have descending triangle. that is now formed. As you can see here, you can see the horizontal line here, and you can see the declining line. That's descending triangle there, and descending triangle can be like any pattern, can be a reversal pattern or can be a continuation pattern. Now, after this big flagpole here, obviously, if this market breaks the lows, if we apply the continuation style as is, we would need to move the same distance here from highs to lows from this level here below these lows here. So is that going to happen? I mean, of course, anything can happen. And this level, though, is the 109.90. It's quite an important target here. So a lot of people will see a previous high here. That's not what I see. This is a second target for a move that was the move that we captured here at 121. So that's what I see there. We will see how this market is going to develop, and consider that now that euro dollar has broken the level, we could see a brief relief rally before a continuation lower, and that could actually keep pushing this price lower. So we need to be very, very careful. Here. Okay, so let me see what else we have. So we have that. So I'm looking for the window here, and all right. So there is a FX ambassador saying is there now. I need some context because I get this in delay. So FX, when you write, if you can add some context, that would be very appreciated. We have Pedro there as well. Hello, Pedro. Welcome. So let's continue here. The Kiwi. We reviewed the euro dollar. Let's look at the Kiwi. The Kiwi is still in that move there, believe it or not. And this market has participated at this level. The market has broken down. That's true for sure. But has not retested this level here, 65.50. And once and if that level is retested, there we want to see whether that level is going to hold. Mind that second tests are always dangerous tests, because when these levels are retested, the professionals who are here, they're going to exit the market. They're not going to stay in the market to see what happens, unless they have insider information and they know that there are deeper pockets that are going to support these levels, which means that you need the double of the volume in order to sustain the same level, because half of the volume will be needed to basically fill the supply generated by people who actually exit, so they sell, so they generate a supply here. And so half of that demand will need to fill the supply of people who exit at this level. The other half needs to push, or the other part of it needs to push this price higher. So that's the psychology behind the second tests. And second test is a dangerous one. But that level has not come into play. So we are seeing a little reaction here. Again, it's important to look at where this market could stop here. This market could stop. This market could stop very, very soon, and there are some notable levels that we can consider if this market keeps rallying here. 066 could be a sell if you are looking to sell. As you know, I'm not looking to sell this market. That would be a counter trend move. I rarely trend counter trend because we have seen on the daily time frame that this market has support below lows, and eventually, and that's what the market is showing at the moment. If that is going to change, that's okay. It's not something that I'm going to gamble about it, or I'm not going to apply resolution from fundamental analysis. I'm going to apply my my analysis as usual. So we have $1 Any other questions on the Kiwi? Just let me know. If you are a swing trader and you took the swing long, there's really not a lot to do here. But just wait and see whether this was a one-day issue, or this market is going to continue lower and retest this level. But even if you retest this level, if you have not adopted the risk-free approach, by no means move your stop to break even. At least if this market comes back, you actually have break even. The problem is that if that's where you are, if this market comes back, it will surely stop you out, right? And that's one of the advantage of using a risk-free trade approach. So this market comes back, it will surely stop you out if you have to move your stop at break-even, which is, anywhere above this low here, plus spread, is going to put you at risk of a stop out, a very highly probable stop out. Okay, so Mervin or who else, FX Ambassador, I've asked for that. If you are in that situation, be very careful there, because that's the situation there. Okay, $1 Japanese yen, interesting market here. This market has been a great, lateral play here. Trade the weekly longs here, went to trade the shorts at 82, then those have traded twice here on February the 16th and on February the 18th, and the longs have traded February the 19th. Participation on the upside, 82, again has traded, pushed price lower, 80, traded again, pushed price higher, and every time we, and since the beginning, since I start seeing this reaction lower here, I said, there's a potential for this market to move leisurely. Now this market has been moving leisurely for more than 2 weeks. It's actually giving here a hint that you would break, but that would be the same case when this bar here was all red. When price was here, this bar was all red. So that's what we're seeing at the moment. I still believe we have support at 80. So if this market offers a risk-free trade here at this level, that's a trade. And when we put this market in perspective, right? Although the Japanese yen, it's at the although Japanese yen strength will push this price lower, and that's what we anticipate. We anticipate Japanese yen strength. That's what the US Japanese yen chart is telling us, and that chart is very, very technical. So until it's gonna show something totally different, this market is going down, and it could continue down from here, by the way. Okay. So the $1 Japanese yen, then, what can we say about this market? Again, we can look at the 4-hour time frame here and see whether let me see and see whether and study what has been going on here in this market. This market, very, very technical market, and now trading at the first target here, or very close to it, well, to it. So on this time frame, there's going to be profit taking here. That's also another reason why that market has stopped there. And of course, there is also the participation on the long side from the daily. So we have here a 4-hour time frame, 8110, that is being pushed lower onto a 4-hour short is being pushed lower onto a daily long here. Who has won so far? Longs, second test, dangerous test. Here there were some people leaving. Price went even lower. People sold here, and then the daily came in again and pushed this price higher. I'm anticipating the same thing until this market shows its character. Big news for us today, a rate decision, and that could actually influence this market. And we will look at gold as well. Later on, it's going up, and its relative strength compared to silver, it's evident there. And gold is telling a bad story about the US dollar in a way. So going to complete here the analysis on this Australian dollar, Japanese yen. We are at those levels there, and I'm not anticipating this market to break right away, right here. There may be an opportunity for this market to trade back into the 82 level there. And I agree. I mean, based on the decision, of course, this market could go lower, but FX ambassador, that can always happen. That's not my style. I don't make assumptions and on what the market could do, because making those assumptions of what the market could do actually skews an objective way of looking at price, which for me it's much more valuable. But yes, I agree with you. If 156 breaks, it could go to 155. That's the Australian dollar, Japanese yen. I think you are talking about the pound versus Japanese yen there, not the Australian dollar yen. So you're talking about the Australian dollar yen here, which is on top of support at 80. And we discussed about the Australian dollar, the pound yen before. So I mean, as we don't have a lot of time to cover all this market, it would be nice to maybe cover each pair and have all the consideration and questions on while we are covering that pair, because then we are not going back. Of course, anything is possible, but to me, it's not what is possible. It's what I see objectively on price, and that serves me very, very well, actually. So then going back to Australian dollar, Japanese yen here, we see potential participation long here. Of course, this market will need to reverse before we see that. And we're not seeing that yet. We are seeing, however, a first target being hit, and there will be some profit taking there. Okay. Euro, Japanese yen. Someone else has asked me to review this market in Jax is asking there, have you reviewed the new $200 US dollar? Hi Jax, yes we did, and I'm still looking for longs in this market despite the huge move lower here. There is a potential for shorts on the 4-hour time frame, but on the daily time frame is still long. So that 50, 65, 79, it's actually has been on my price here, that has been tested already. You are long from that level. Okay. Well, that's very critical, because the support on the daily for me, came at this level here at 65.50, and could come again at that level if the level is retested, and that, as we mentioned, could be a second test. Buying around these levels, to me, it's a little bit dangerous. So be very careful about that. Okay, about that position. You have a gain there. There is a potential. There's a potential for retest of this level. This is the largest level here, where if there is participation, this market could continue higher. Okay, so I'll be very, very careful with that position. It's profitable at the moment. It is actually making some money there, but provided you have protected yourself in the right way. However, there is a possibility for this market to retest 65.50. Also, because on the 4 hour, the algo will be short now. So it doesn't mean that this market cannot go higher, but obviously, and we saw this market after this move lower, then correct, and then move higher after this huge move lowers, correct, and continue higher. It's going to do that again. We don't know, provided you are covered and protected. But make sure that you protect yourself here anyway if you want to keep this position. Excuse me. Okay, so we covered the Australian Japanese yen. We were looking at the euro versus Japanese yen. It's a similar story there as for the pound, Japanese yen, as well as in a way the pound versus US dollar. So this market has been, let's review that from the larger time frame here. It's always important to restart from the weekly, and this market is continuing lower, and as not, this market is continuing lower into that 122, which is the level that I mentioned. There was nothing happened. The market didn't even try to attempt for a move higher. So this market is actually going to test the level, and this market has not been very, very technical here, but there is going to be some participation and possibly profit taking at that level. Considering how aggressive this market is, this market could continue lower, but we need to go and study the smaller time frame to see what's going on the smaller time frame in order to understand what is the potential for this market on this smaller time frame. So the extension have not worked here. So this market has been pushed lower from a different anchor, and that's not the right one. The one that we also mentioned is this one. So this market is being pushed lower into the 122 level from that area. I'll be very careful, and if you're short, I would take profit at the 122 actually, because the 122 is going to be a level where there could be some profit taking and even potentially participation on the upside. So if you've been if you've been riding this move lower into that level, that's the area where you want to take profits. Okay. Any other questions in relation to that? Let's make a time check. It's 8:34 there, and we are still a few. S is saying yes, please. Euro Japanese yen about to test 122. Can we see 110 out of this market? Well, we can see a lot of things, and the point that this market is moving laterally here on a very, very large time frame, believe it or not. And I'm not sure 110. It's not impossible though, but we could see this market moving into 115, this level here, and below that level. And actually there is this market could actually strongly react on top of this area here, and so there is the possibility to get for sure into 110, but I don't see that happening soon here. We could possibly get some profit taking as the market enters this area here, but we need also to see whether there is participation from weekly long. If there is no participation from weekly long, this market is going to slide and continue. So we cannot exclude that 110. You mentioned the 4-hour looks very nice, and let's look at that. The one it's very, very extended too. And whenever we get this very, very extended market, there is always eventually a bounce, and it's very probable that that bounce will come from that 122 level. So there'll be an opportunity for shorts to remove some of their shorts. So we could actually get that that bounce there. Okay, so for sure, I mean, 122 or around 122 is an area where to remove profits if you've been trading this market on the short side since the beginning of February here. And this market has offered opportunities on the 30 minutes as well to get involved. It's also offered a full 50% retrace here on September the 9th. So this market has actually offered opportunities, entries at the Japanese Open here and the Tokyo Open here. So the opportunity for this market were there, definitely were there. Opportunities at the European Open as well. So this market has given a lot of opportunities during the European as well as the Asian session here. But now, I mean, we have to be very careful for short. Okay. All right. So I see there Mervin, SP500. Let's review that market. I always love reviewing SP500, and let's see where this market has bounced and what is actually responding to at the moment. It's responding to that 50% level from highs to lows here. You went into that area, but it's now being pushed lower. And interestingly enough, when we look at the daily as well as the 4-hour time frame here, very good. Sorry there, I'm short 124.74. So in the Euro Japanese yen, that's good. But be careful when it gets to 122. That's my only. Very good, and keep smiling. Keep that smile on your face. So going back to SP500, as I was saying, this market has reacted to that level. This level was known in advance. How many days? 1, 2. Sorry, this is the weekly. 2 weeks, 1 week and a half before. Okay, so it was known between 7 and 8 days before. When we look at the daily, we know that these 50% level are always very, very important. So once we saw the market started reacting there, and then it continued higher, one could trace this. Now, the fact that this level is there doesn't mean that, market is going to get necessarily participation from it. And this market has traded, though, this market has not responded to the shorts here. It actually has responded to profit taking from longs that participated within this area here, 1895, and took profit at this level. So would we say longs are still in control? Yes. Believe it or not, longs are still in control, or I would say long have still to be tested. And if the market continues lower, that will be tested at this 1908. These are the two levels that I provided yesterday as well. They're always the same. And interestingly enough, we saw overnight, we saw the market bouncing in this 1928, and now it's piercing through it below 1918. The next level where longs will come in and try to hold this market is going to be the 1908. And when you look at the 4-hour time frame, that becomes evident. Becomes very, very evident that this market have actually responded to a 50% level overnight. Look at the participation that it gave a very trade, right? And now it's getting into that level, finding no participation at all. Okay, so on the daily time frame, we need to wait until 1893 in order to confirm that the bears are in control. And now this time, if the bears are in control and continue pushing this price lower, they're gonna beat the weeklies as well. And this is gonna become complicated because you know what I think about these levels. So let's see what happens here, whether this market is going to be picked up at 1909 tomorrow and the next day. This might be a big tell of what's going to happen in the stock market. So be always very careful here. And that's what we're seeing at the moment. So on the 4-hour time frame, it's very clear here. The weekly are beating this area of support. This is soon gone, 1918, and we are going to retest that level again. And actually, it's not that level that we retest. We retest another level if we don't get participation from long. This market is going to be busted in a way. All right. We have also seen gold. Gold, obviously, if SP 500 corrects on the downside, we see gold correcting on the upside, of course, and that's what we have seen. And on the daily, very strong gold. You remember that? Sorry, that's not gold. This is gold. And look at this bar here. This market keeps keeps correcting laterally on top of an area of support here, which has been tested, this 1197 here, and this market is showing exactly the opposite of what we're seeing on which market was that one? The market is showing lower lows. That's the US dollar, Japanese yen, that is showing. This is more of at the moment looks more of symmetric triangle here, but it doesn't matter what the shape is. There is support here, and this market is correcting on top of support, so that very often means continuation higher in the direction of the trade. And this could be as high as 1300 here and then 1348. So I think if you have longs, especially from lower level, there is no need to remove these longs here. And silver, on the other hand, it's a bit weaker. Of course, it has held, a critical area that we were looking at was this 50% area here. Notice that differently from gold, gold has actually broken the corresponding of this area here, while silver has respected the corresponding that area. So it's still, in a way, it's a battle here. Still, bulls trying to oppose bears here, which very, very clearly traded around 16 here. So the situation of silver and gold is quite different. Looks like more like gold is dragging silver rather than silver moving higher because of participation and conviction. So that's what we are seeing clearly from price at this moment here. Okay. So let's see what else. Any other markets here? There are no other markets and there are no other questions. I would actually do slightly a slightly shorter session here. Where the opportunities are going to come? Opportunities in this market that keep sliding are going to come in two ways. The opportunities are going to come either if the market strongly retraces into an important level, which is typically a daily level of resistance or support, depending on which market you are looking at. I'm looking at shorts in US dollar Japanese yen, shorts in the US dollar Canadian dollar now. There were longs before, but weekly are not in play any longer. So there are no longs there. Shorts in Euro Canadian dollar and also Euro Australian dollar. We will see how the news play out here. Apparently, there is a move higher, and that's when the daily levels are retested. But when market keeps sliding, we need to have a different strategy in order to participate this market, because this market are not going to offer opportunity to trade, clear opportunity to trade on the daily time frame. They might offer on the 4-hour time frame, but sometimes we just have to pick up the market at the European or US Open and minimize the risk and go with the flow as the market continues in the direction of in the prevalent direction. The moment it's down. Okay, so that's what when we see sliding markets, that's not the case because we are capable of capturing this level. But when we see sliding markets like this, or the Euro Japanese yen, the pound versus US dollar, the pound versus Japanese yen, the only way to actually participate is by participating at the US Open or European Open. Sometimes, for some market, at the Japanese Open as well. As we saw for the US dollar, for the Euro Japanese yen. Okay. So if there are no other questions, what I'll start a recap right now. And what we did, we reviewed a number of markets. We started from the euro dollar. We mentioned the fact that the euro dollar has pierced by 2 pips, and that's enough for me, the area of potential support. So this market has now the potential to keep moving into 105.40, or by the way, into the into the lows here of this lateral move. Don't forget that this market has started a lateral move March 15 and could still be, and it still is in that lateral move. We hoped that, and we saw participation on the long side in a couple of occasions on 2 levels that we knew in advance. We mentioned 110.80, and then we also mentioned and traded actually both of these two 109.60. They all worked and offered us a risk-free trade. We didn't know whether those levels would actually bring price higher, so we are always compelled to trade those levels. We then reviewed the euro, Canadian dollar, and the US dollar Japanese yen, and we mentioned the fact that we reviewed this market on the 4 hours. We mentioned the fact that these markets, we reviewed also the Euro Australian dollar. We mentioned the fact that this market had traded shorts recently, and they were very good play to bring price into the previous low. In the morning, in my room, we also took a short, a continuation short here in this market, Euro Australian dollar, and then this market is actually now correcting after testing the lows. We then reviewed the US dollar Japanese yen. This market has now pierced the all the way halfway back there, and this market is controlled by shorts on the 4-hour time frame. We can see that clearly here, and that second target has also traded. So that's the reason why we are seeing that reaction there, because profit taking is coming at these levels. And there is going to be a potential continuation lower here. Let me give you the level. If you see this market reacting at this 112.45, that's going to become an opportunity for a continuation short until we see some change in trend there. We talked about the Australian dollar, Japanese yen. This market has been moving laterally. It has tested so the importance of second test. This is a third test. There is some profit taking here. Again, we showed the measured move short. You're very welcome. Good day. And this market could actually now reverse. So be careful here. Never assume anything about the markets, because it's a very dangerous activity to make any assumptions. And then I was asked to review the euro versus Japanese yen, as well as the pound versus Japanese yen. We mentioned that these markets are, the first one already tested the support, 156.40. The second one is about to test the support, 122 there. So the move has ended. There's nothing to add, nothing to do there. So be very careful about trading these markets. And then we talked a little bit about the SP 500. We mentioned also the Kiwi. The Kiwi on the daily, has now retested this 65.51. The 4 hours going to try to push this price lower for a retest into this level. So you have to be very careful with longs there. But anything can happen in this market. If you have a swing long, protect yourself. Try to not get stopped out here. And the risk-free trade is a very good device to help you, keeping yourself in a position, whatever the market does. And actually, if you are capable of doing that mind shift, I believe that you are going to create the basis for basically the possibility to generate gains in the future. When you get these kind of swing opportunities, because that's 20% of your money will come from 80% of your money will come from 20% of the opportunities. So that's where the opportunity is. And finally, we close with the SP 500. SP 500 that has been testing. Let's see where we have it. Has been testing the 4 hour all the way halfway back. This market is also being pushed lower here, and there is the potential for this market to below 19, below the level that we mentioned before, that is being tested at the moment. So below that 1917, we could see 1908, and we will need to see whether the bulls are capable of pushing this price higher. If they're not capable, the shorts are in control, and they're going to push this price lower into 1895. Okay, so you need to we need to be very careful here. We don't know whether the bear has started here. We still don't know that. We will discover in the coming days. All right. So this is everything for today. Thanks a lot for joining. I hope you liked this review and this is useful to you. If you find this show useful, you by all means, please actually um, tweet about it or tell your friends, or let's try to grow this show and to increase participation as well, so we can have more interaction, more questions, and we can review more ideas as well. All right, so I want to thank you everybody for being here today. So I hope this was interesting. Thanks, Marvin. Thanks. Good day. Have a great evening, day, and good night as well to everyone who actually made the show. Thanks, Pedro, Scott, Desi, Mark, Mervin, FX Ambassador, Sinatra, good day, Lee. Sorry I'm late. Thanks, G. Streaming crashed 15 minutes ago, but recovered with a page refresh, so may not have been from your end. Just for your information, um, I was not aware of that. So let's hope the recording is fine, and you can actually work the at the recording as well. So thanks very much, guys, and have a great day, a great trading day tomorrow, and be safe, mind risk. This is a business. Risk is trader's job number one. Thank you very much, and bye bye now.